friend Maurice, who is recovering from back surgery and spent most of last year touring Ireland and Europe with Darius Rucker, and is now embarking on a new part of his career. So Maurice, get better. Here's 3 at 3 for today, my friends. We're getting started. Bang! Do like me some Darius Rucker, that's for sure. All right, folks, 3 at 3, you know what that's about. 3 at 3 is where I bring you 3 pieces of unusual option activity, and we discuss it here. I give you a little, maybe even a little tutorial for what options are exactly, as far as every option represents 100 shares of stock. You'll hear me say that time and time again, because I think it makes you a better investor and trader if you know that stuff. Another fill. Bang. All right, let's get into it, shall we? Disclaimer. This says that our services are for educational and informational purposes only. You have to decide what is appropriate for you. All right. You want to learn more about it? Just go to marketrebellion.com/UOA. That stands for Unusual Option Activity. So again, it's marketrebellion.com/UOA. All right. By the way, hour from now, we've got Phil Orlando from Federated Hermes. That should be fantastic to have Phil with us. They only manage about 500, maybe $600 billion, folks. I'm sure he has no insights at all into, of course I'm kidding. He is a great strategist, and he will have some great ideas and hopefully cite some wonderful opportunities. I encourage you to join us. That is 1 hour from right now. All right. So what happened this weekend? Well, as you saw on Halftime Report, Buffett bailed on the airlines. Now, this is not me giving Warren Buffett a hard time, because quite frankly, how could I? Warren Buffett's a legend. He does a fabulous job managing money for people. He's very thoughtful. He and Charlie Munger are about how they go about it. And I think this just shows why he is such a good investor, because he cuts his losses. When you're managing your own money or money for somebody else, you need to be able to cut those losses. You don't double down because the stock moved against you. If something has changed, as it did, as you heard him say on Saturday with Becky Quick, a great job, Becky, again. No surprise there. Becky does a great job all the time. But as Warren Buffett said, when things change about your outlook and how long it might be for a recovery, in this case, he's talking the airlines, why would Warren Buffett at 80 plus years old want to sit there and hold on to a position that might take years to come back and might have a whole bunch of impediments, like, maybe diluted, may have a whole bunch of government ownership, who knows? And for that reason, those reasons, Warren Buffett elected to step away from the airlines, virtually all his holdings in the major airlines. And we saw the footprints of it again last week. You want to see it? Friday, unfortunately, our stream went down because John McAfee's just too popular and he knocked us down. But as we were getting ready to bring him on, nonetheless, AAL from Friday. As you can see there, AAL is American Airlines. It's one of my favorites. It's the one I fly more than anything else. But unfortunately, at $11.18, somebody was buying 10,000 June 10 puts. Now, was it somebody that provided an exit for Warren Buffett? Maybe. But there was somebody buying an awful lot of puts. Let's say they paid an average of $1.50 for those puts. Well, as it fell, there's a 5-day graph, and as you can see, that gap lower from approximately $10.60 on last week to falling all the way down to where it fell to here. And let me just see here. Dirk, I'm broadcasting 3 at 3. Do you need me for something? That's all right. I was just checking to see if Dirk needed anything, folks. I'll go right back to broadcasting. That's all right. See, that live television, live streaming, now you know. Anyway, what we got going on here, folks, is it gapped today down to about $9.20. It was lower even in the pre. So if you were somebody who could have bought stock on that dip, you could have locked in even more of a profit. But as it was, those options opened close to $2.45. You see that red arrow there on the screen. So in other words, the options that you pay $1.50 for on Friday, which would be $150 per option. Again, every option is for 100 shares of stock. So for that reason, you would have profited by nearly $1 or $100 per option. So if you bought a 10 lot at $1.50 and you sold them at $2.40, you made 90 cents 10 times or $900 on that $1,500 investment. That's not bad in one day. And you knew Warren Buffett was an owner of airlines. You knew he might talk about it at his May 2nd discussion, which he does every year. This one was, of course, sadly, without the 25 to 35,000 people that are usually in Omaha. But nonetheless, it was good to hear exactly Warren's ideas and his outlook, even if it did mean stocks like this one suffered. All right, let's get to fresh meat, 3 at 3, starting with Microsoft. Why? Because Pete talked about this one on the halftime report. Now, a number of you are thinking to yourselves, okay, what's the embedded information? Because you know how I deal with this. Number one, these are options that expire this coming Friday. So in other words, they've got 4 days left to trade. Tuesday, Wednesday, Thursday, Friday, 4 days left to trade. Short term, somebody thinks Microsoft moves up quickly over the next 4 days. Maybe it moves quickly and doesn't get to 180. But if it moves up quickly, folks, these calls will increase in value. If it's a slow, steady crawl, then that's not what you want for something that is short-term as this one is short-term. But they paid 99 cents all the way up to $1.94 with the stock at 177.84. Okay, so that's a lot of oomph that they pushed, a lot of premium into those options with the stock there. Now, what I thought I would break down for you, because I listen to what you guys say on Twitter, and frequently you guys will say, well, Doc, what was the thought process? How did you and Pete and the team, how did you happen to determine that this was something you wanted to follow? Well, take a look at the top line on the left side of the screen, folks. That is today's date, the time, 2:47, when I prepared this slide, just minutes before we went on with you, and those May 180 calls. Now, when Pete cited it just a couple hours ago, they had traded 17,000 of those. Now look at it, 40,000 of these options. That's 4 million share equivalent, folks. That's what you want to be paying attention to, 4 million share equivalent. Now, does it mean it's 100% always right? Bet your mortgage on it? No. But again, I am not your financial advisor. I am a trader. I put more Microsoft on because of this, but that's what I did. Is it accurate? Yes, it's extremely accurate. Should you bet an awful lot of money that you need for groceries and things like that? No, but again, I am not your financial advisor, but I am telling you that I put a significant piece on in this case. And here on the right side is why. That down arrow, when you look at that, folks, those are all the Microsoft 180 calls. And look at those blocks, 600, 530 contracts, 186 contracts, bang, 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 over and over again. That is what I like to follow. I want to follow somebody who's got a big commitment to it. This trader truly does. And somebody who's been right before. And if I'm right about who this is, they have been right many times before. So that's our first of our 3 at 3. Let's go for number 2 right now. Tesla! Oh, if there was a more hated stock than Tesla, it's really hard to find it, folks, because as many of us love Elon Musk and Tesla, there are at least that many that hate his guts. And they surely hated him last week when those tweets went out, whether Elon was, experimenting with something or not. He was certainly hurting his own cause, it would seem, on Friday when he thought that, the shares are probably too high. But today, different story. Now, I'm not saying different story because he tweeted something. I'm saying different story because all day long they've been buying calls in here. This was, as you can see, 10:01 in the morning. So the first half an hour of trade, because I'm set up on East Coast. So they started buying right at half an hour into the trading day, right after amateur hour, even though, it's only half an hour. They started buying right after that. They bought 6,500 of the weekly, as in May 8th, same as Microsoft, 4 trading days left. They bought the May 8th calls at the 800 strike with the stock at 700. So does that mean it's going back to 800? No, of course not. Does it mean it could make a move towards 800? Sure, it could. There's no guarantees, but it could. And so what did I do? I jumped in here and bought these calls, as well as I was already long Tesla, so of course Friday was not a great day for me, but I had written at the money calls, those 700 calls, I got over 100 and I want to say $120 for them or some crazy number. Anyway, now look where it is. 701 and 80 cents. And they paid from $4 up to $10 for these calls. All right? Where did it go? Oh, only $740. In other words, it rallied $38 since they started buying. And look at that. Right there, just running. I love that. Now, this chart is central. Time zone is central time. But you can see, if you looked over at that far left side of the graph, that it was hovering around 700 in the first half hour and then makes that big spike that carries it up through 740 to 745. So that's the second of our 3 at 3. And now for the third, let's take a look at CCJ, Camco. Now what's going on in Camco? Well, take a look. Camco, CCJ, we've had several moves in here that we thought were notable. Back on the 22nd, which isn't that long ago, folks, basically less than 2 weeks ago, they were buying June 12 calls when the stock was 9.5. Then they bought them again the next day. They bought the May 10 calls when the stock was 9.75. Now, with stock at 11, they're buying 20,000. That's 2 million share equivalent. If you're new, 2 million shares, how do I get that? 20,000 options. Every option is for 100 shares of stock. So you have to slide that decimal place over 2, and that means 2 million share equivalent. I like to buy when somebody's buying a lot of calls or a lot of puts. I like to buy along with them. And so I bought this one, paid 48 cents, the high end, because they traded 20,000 of those, 47 to 48. And how does the stock look now? Well, stock is basically just under where it was when they bought those. So, in other words, still in the same place. Keep an eye on this one, my friends. This is a very interesting situation with a lot of calls being bought. And unlike the other two, this one is out in June. So forget about, this Friday. It has to happen by this Friday like those first two. This one is all the way out in June. So that's what's going on here. You want to learn more about any of this? You want to learn about trading? You want to learn about what's going on in the markets? Check out marketrebellion.com/UOA. That's marketrebellion.com/UOA, and you can see all about it. And I encourage you to join me with Phil Orlando. No, Tony Orlando. That's not the same guy. Phil Orlando from Federated Hermes. is going to be on with us for our Volatility Roundtable. Phil's a great guy, good friend, and is going to give us some great insights to what he thinks is going on. So thank you for joining me today, folks. I hope you have a great day, and make sure you join us if you can at 4 p.m. Eastern, 3 p.m. Central for Phil Orlando and our Volatility Roundtable. Bye.